Hello, everyone, and a very warm welcome to today's cryptocurrencies update for February the 9th, 2024. What? You have the slide from February the 3rd up. Yes, because it is a week ago. We already said it is boring, but it's going to get exciting. All right. Nothing stays boring too long in crypto market, and exciting it got. So we are now at the 1, 2, 3 versus ABC. What do I mean with that? Are we in a counter trend rally bounce, ABC, or are we in a new impulse higher? After three waves lower, which we've had in January, we need to always expect at least three waves back up. Why do I say that? At least because three waves down can be all of the correction, or the correction is becoming more complex, either a flat or a triangle. Since we're dealing with a second wave, most likely, it cannot be a triangle. That's the Elliott wave rule. So it's a flat, potentially a double zigzag. Now, if we do a double zigzag, the retrace, the bounce, is most of the time confined below 76.4%, 61.8% retrace of the previous decline. We have surpassed that over the last 2 days. So all we've left is a flat. So this can still turn into a 3 down, currently 3 up, 5 down correction, versus the correction is already completed and we're starting the new bull run. Allow me to explain. This is, of course, our bigger picture. Longer term, until the end of next year, we're going to look much, much higher into at least 100,000. I would say 150,000 plus or minus 25,000 seems to be a quite good example. Okay, it matches also with the logarithmic growth curve, which could even point to as high as 280,000, by the way, if we get a massive extension. I don't know, to be determined, all depends. But somewhere around, as I said, 150,000 plus or minus 25,000 seems to be a very reasonable upside target. The question is now, have we completed this correction already, right? A, B, C, or did we only complete A, are now in B, and we're going to get another wave C? I cannot tell you just yet, but we've set out the parameters, right, to know which of the two it is. That is always what we use: parameters, price actions, price levels, okay? And that's what we're going to work with. So let's go straight to the charts. Before we get there, please remember there's many ways I can help you. Please always read up on the Elliott wave theory. What I say is all summarized in the Elliott wave theory on my website. You want to know how to use Elliott wave for your trading and investing, please log into our premium member website using the password that you got when you signed up. Please do not forget our crypto trading alert service. It tells you exactly when to buy, when to sell, when to hold, what to sell, where to raise stops, all those things. If you're new to trading, it is absolutely great learning to do so, because most of the time people don't know how to trade. Most of the time people simply forget to set stop losses. Again, I can also build your trading models for you, depending on your risk tolerance, all those good things, $1,500. Anything else, please contact me and we can work it out under contract for $500 an hour. That is very cheap, considering what you normally pay if you go to a doctor, for example, or a lawyer. That said, this is the first wave count. We were looking for the bounce into this gray-orange target zone, and we exceeded it. Remember, we said if we go above 46,500, we have to start to consider that the wave 2 is already in place. Now, we can still be in this flat. So we have 3 down, and somehow the labels got deleted. So let's put it here. 3 down, this is A. And then have B here, right there. And then, of course, this is that wave C. There. 3 down, 3 up, 5 down. We can retest the all-time highs. We can even go to 50,000 something. However, if we see that, and we're going to reach the 161.8, most likely this is going to be the 3, 4, and 5 pattern. Once that one completes, that is gray 1 of green 3. We'll get a grade 2 pullback, probably back to about 45,000, assuming, of course, a standard Fibonacci impulse pattern. We don't know yet, but that's all we could go by. So far, so good. So we're going to top here at around 51,000 for wave 3. We're going to drop here to about 46,000 for wave 4. Then we rally to about 53,000 for wave 5. We get a pullback to about 45,000 and then off to the races. Okay, all of this will last into end of Q2, or Q1, beginning Q2. Okay, this will last about this long. And that will still fit with the weakness that we foresaw using the 4 phases of Bitcoin based on its 4-year cycle, right? Every year is a new cycle with the bear market having ended in 2022. And we're now in the new bull market. That's the difference, ABC versus 1, 2, 3, 4, 5. Okay, so we'll know soon enough which one it is. Either way, of course, this one is going to look rather immediate higher. This one is going to look first lower, then higher. So the resolution over the long term remains higher. We have our warning levels in place, okay, for this wave count. So the first warning level, I can raise it now, okay. The second warning, I'm going to raise it to about today's open. That's going to be the first warning level. The second warning level is going to be wave A high. The third warning level, wave B, and then ultimately, of course, there. Those are our warning levels, okay? So similarly here, we're going to raise our warning levels. The first warning level is, of course, if we break below today's low, because then we're setting a lower low. Same here, wave 1. Can always do a diagonal, so there might be some overlap, but if we go below, of course, the start of wave 3, the end of wave 2, odds really increase that this is not a impulse anymore, right? So far, so good. Looks really good. Back above the Ichimoku cloud, back above the 20-day, the 50-day, 200-day, almost a 100% bullish chart because the 20-day is not above the 50-day. So similarly, GBTC and ETHD, when I talk about Ethereum, follow along with Bitcoin and Ethereum respectively. Now, we broke above all the warning levels that we had in place for, excuse me, the bears, especially the orange level. Also here, we can still do a flat for a wave C, and then a wave for a wave C of P, and then a wave C lower, probably back to about the 123.6% region, so anywhere around $31 to $35. Then we have a simple flat ABC, quite common for a 4th wave. I don't have 5 waves up yet. If we do get 5 waves up, you see it here, 1, 2, 3, 4, 5. That's potentially all of 5 or just 1 of 5. Okay, so far so good. We did bottom here in the ideal wave 4 target zone, so it's now up to the market to decide what it wants to do. First warning, below today's low. Second warning, of course, below the wave 1 high. Third warning, below the wave 2 low. Then it can't be an impulse anymore. And final warning, of course, below the January low. Okay, so those are 2 options, A, B, C versus 1, 2, 3, 4, 5. Let's look at Ethereum. Ethereum does look a little cleaner and better for a C wave of a B wave with 5 waves up, most likely. Can always subdivide it further. We're right here in the ideal wave B target zone in orange. And now if we break below yesterday's low, it increases the odds that this wave C of 2 is underway, etc., etc., right? These blue, gray, orange, and red target zones are all our warning levels that this wave 2 is underway. And it can go as low as $1,600, by the way. I don't think we're going to go much below 1970 if this is the case. Alternatively, again, we have this 1, 2, 3, 4, 5 set up to play, okay? With the warning levels in place telling us this 1, 2, 3, 4, 5 is not going to happen. This is where we're at right now. We did get 3 waves lower. And as you can see here, the January low was close to the 50% retrace. Okay, not too deep for a second wave, but it's okay. It doesn't have to go to 62, doesn't have to go to 76 or even 50. This is standard normal, doesn't have to be. So now we have to see this blue wave 1 as a leading diagonal, 1, 2, 3, 4, 5. And this is then one of This is 2, 1, 2, 3, 4, 5. So wave 3, 4, and 5. If we can fill in this pattern, you can see what we're going to expect. A little bit higher, lower, lower, up. Very simple. Here, we're pretty much going to go lower first, then higher. So the end result over the long term is the same. It's just a matter of how we're going to get there. I cannot tell you which one it is. That's why I have had the A/1, B/2, C/3 on the chart for many, many days, almost weeks now. So no surprises. Just now we have more granularity to fill in the details to know exactly which of the two it's going to be. So short term, there's still some variability and uncertainty. Is it going to be 5 up versus 3 up? We know below which price levels the odds start to increase. It will not be 5 up, and then we'll start to look immediately lower. If those warning levels are not breached and we get a clean impulse, then the next pullback is the buying opportunity, because after that, it's going to be rocket launch. That's going to be the third of the third of the third wave, rocket launch. All right. So that brings us to ETHE. ETHE is still within the ideal wave B target zone. You raised it a little bit because of the length of the wave A here, B, C. Okay. So if we do some fib work here, let's have a look. This is then the length of wave A. This is then the length of wave B. And you can see we can still allow a little bit higher. Okay, so we can still allow a little bit higher, but a C wave doesn't have to be equal to the length of the A wave. A C wave can also be 0.618 or 0.764. Sometimes it even extends, but that's most of the time in a flat. So we have now, of course, the A, the B, and the C like this. All right, again, doesn't want to save it, you get that. ETHE's bullish scenario is shown here, 1, 2, and of course we're going to go 3, 4, and 5. Similar, of course, to Ethereum, right? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Warning levels are clearly on the chart. Let me update those for you. So the first warning, right? We broke above all these bearish warning levels, but now we're going to reverse it. Okay. So the bulls want to hold, of course, above today's low. That's one. Then we need to hold above this bounce there. We need to hold, of course, above this low here. And then the final warning is there. Okay. But this still looks like a nice flat. And we can go as low as this. Okay. This is for CSA. It's very possible. Doesn't have to be. Normally, we'd like to see it somewhere there, but we can go to the 61.8. All again depends on what is the relationship between the C wave and the A wave. Well, I can't tell you because I cannot predict the future, but I know that it's either equal to 1 or a little bit less. And it can extend, of course, tremendously as well, but let's not go there for now. So this seems to be a logical C wave target zone. Again, only if we see breakdowns below these warning levels. We don't see breakdown below these warning levels. We continue to march higher. Okay, and then of course we are going to see an impulse. 1, 2, and then put that on the map. I don't have it on the chart yet. I don't know why stock chart always does that one. So there. And then we should see, of course, the breakout, something like that. 3, 4 there. Right. And that should be the ideal third wave target zone there. And that should be 5. Okay, so that's the ABC versus the 1, 2, 3, 4, 5. Simple. Now let's have a look at the miners. Okay, the miners have broken out, which means the impulse lower is off the table. So we now have an ABC lower for Mara. Loud and clear, not 5. Impulse lower. And as you can see, today's high seems to have reached 161.8% extension. So I think we're getting close to this wave 3, 4, and 5. This argues if these are leading indicators for the cryptos that we'll see 5 up for the cryptos as well. This is now my preferred path. Again, this potential wave 4 had to not break above the gray line and definitely not above the orange line. So all these warning levels have been broken. That means I think that we are in this red wave 5. Okay, red wave 5. Remember that we had 1, 2, 3 versus ABC. 1, 2, 3 versus ABC. You don't know until after the fact. Okay, that's really simply the case. So we've broken above this target zone for a potential wave 4, take it off the map. Bottom in the ideal wave 4 target zone, take it off the map. So the first warning, of course, for the bulls is if we break below today's low. Why? Because then we get a lower low. Okay. Second warning, I would say, is if we break below the 100% extension. Why? Because normally after a third wave tops at 161.8, the fourth wave goes to the 100%, and the 5 goes to 200%. Second warning is below, of course, the wave 1 high. We can still do a diagonal, 1, 2, 3, 4, 5, where wave 4 and wave 1 overlap, so we can allow for it. But that, of course, is already start to increase the odds that we're not seeing that happen. And then, of course, below the January low, all bets are off, and we're going to go much lower. I like it. We're above the cloud. Everything looks pretty good. I prefer this wave count with, of course, the warning levels right in place. And as you can see, if we bottom here for wave 2 around, I would say $20, assuming wave 5 goes to about $26, $27, right? Somewhere around 26 plus or minus 1. And then wave 2 back to 20. Then wave 3 can go to 40, and wave 5 will go into the 50s, assuming no extensions. And that's only wave 5 of wave 3, by the way. Save the changes, yes. This looks good. I like it. We'll leave it as is. So Riot here exemplifies what we're looking for, right? We're looking for ideally a 1, 2, 3, 4, 5. That was my ideal wave count. I know some other edit waivers had it on the map as well. Well, yesterday, it was still possible for an ABC, but we had to stay, of course, below the wave 1 low. Why? Because 4 and first waves cannot overlap in a standard impulse. I already mentioned that yesterday and before that, etc. So now we have this overlap. Why? Because the price is now above the wave 1. So this is not a viable wave count anymore. Anticipate, monitor, adjust. Okay, anticipated 4 and 5. So far, so good, right? But today, got invalidated. So I'm going to recount everything that we had the wave 2 low here, back to the original. Wave 1 here. Again, it's really about interpreting all these scribbles. So if I interpret just one day different, I get an impulse. Okay, that's it. And then we have ABC lower, loud and clear, so it's corrective. So then we have 5 up, 3 down, and working on a new 5 up. This is my preferred Elliott wave count. It matches with Mara, and if this is the case, then it matches. This is what is forecasted for Bitcoin potentially as well, with the 3, 4, and 5. So this one is, of course, now off the table. It cannot be a 4 unless this is some sort of weird diagonal. Don't like it. Don't rely on it. But therefore, we have our warning levels in place. If we go below today's low, is warning level 1. If we go below the wave 1 high, is warning level 2. It can still be a leading diagonal. Don't like it. Go below the wave 2, then we clearly have only 3 waves up because 4 cannot go below wave 2, not even a diagonal. And of course, below the January low, all bets are off, and I'm going to look for the $7 anyway. But this wave count I now start to like. Again, I had simply reinterpreted this one day here. See my cursor? This is it. So then we have 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4. And then this is 1, 2, 3, 4, 5, 3, 4, 5. That's it. Okay, ABC. So I have to reassess the charts once we broke above the warning levels, right? These were the warning levels, blue, gray, and orange for the bears, and we broke above it. Now we have to reassess. So I think we got 3, 4, and 5. So 3 should top somewhere around 15.5-ish, somewhere around there. Let's do some Fibonacci work, shall we? See what we get. We might get quite a massive extension, by the way. Wouldn't surprise me there. So this is 3. And then we probably get 4 somewhere here. Okay, and then we get 5 somewhere there. Wouldn't surprise me. Something like that. That's 1. And then we get, of course, the wave 2. That seems to be a nice congestion zone. By the way, these horizontal bars are the price by volume. They kind of show you where support and resistance are based on price and volume. And then we get, of course, the wave 3, right? Something like that. There. That's what we're going to look for now. As long as we hold above those critical price levels. Quite simple. I'm going to leave it on the map. So that's all I have for today. Things have resolved bullishly. Now, Bitcoin and Ethereum will let us know if we're going to get 3 waves up only. In this case, it will be flat, wave 2, or if it's going to be 5. If it's going to be 5, the next pullback will be the second wave of the third wave. That should be an excellent buying opportunity. So we almost have resolved versus what we had up to yesterday. With today's candle, I would say things start to look much better in the ABC versus 1, 2, 3. We have now loud and clear parameters that we can use. So I think things are much easier now than they were before. Before it was really uncertain. Now it's much more certain on what levels we're going to have to look at, below which the impulse higher is going to be off the table, and we're going to move immediately lower versus the 1, 2, 3, 4, 5. All right. I think I've said enough. If I keep repeating myself, I'm probably going to get unclear. If you have any questions, let me know. Take care. Trade safe. Catch you all later.